one of the most pernicious problems, I think, about living under a central banking paradigm where we're printing money and people that are the savers that are being stolen from in this paradigm don't understand what's happening.
Yeah.
All right. So the prices are going up.
Yeah.
The government is blaming capitalists or blaming supply chains, or anyone other than the central bank is being blamed for the inflation. And the pernicious part is that the proceeds stolen through inflation are then used to fund propaganda, fake news,
and
war, and then also the pernicious part is this pseudoscientific paradigm. We brought up Keynesian economics, right? We have a nonsense academic paradigm in all mainstream universities that says effectively government is God. They can print as much money as they need to, and they suffer no opportunity costs. And so the weird thing is like the money printing is being used to steal, and then the proceeds from the theft is being used to condition the victims of the theft to believe that inflation is good for them.
Amazing.
How do we break out of this loop? Is Bitcoin the only hope for us?
Yeah. Listen, this fiat thing, which is a direct consequence of Keynesian economics, has to be put to death, like the Spike, the vampire with a silver bullet through the heart.
Yeah.
We really need to get rid of fiat. So the only way is to have a better option. And in that respect, that's why I'm so optimistic about Bitcoin, because more and more people will come to realize that the way to get insulated from inflation is through Bitcoin. Mm-hmm. Now, there's another thing, the governments, they're so tricky because they're the ones who measure inflation.
Mm-hmm. Yeah, of course.
The CPI, oh yes, the CPI says 2.1, precisely, not 2.2, 2.1, not 2.0, 2.1. What the hell is this? And how did they come up with that number? Who feels 2.1? No, but then you turn around and you see that the car is $100,000, It used to be 20.
Yeah.
It's such a scam. I just don't believe it. It's hard to believe that the more people don't realize it, And then there's another, even we talk about the inflationary tax, which means how the prices of goods and services rise, because of the currency debasement.
Yeah.
But that does not take into account that in the past 40 years, we have had a huge technological deflation, which should have made us all much richer.
Yeah.
And prices should have been much lower in all respects.
Yeah.
All that technological deflation, instead of being in the people's pockets, is in the government's purchasing power. Yeah. So it's a double theft. This is more sophisticated, huh? Yeah. It's not just the inflation.
No.
It's all the deflation that the government took for their own benefit.
It's an excellent point. You get people hypnotized on this 2% number, and they never see the foregone price deflation that they would have enjoyed.
Listen, I've been selling TV sets forever in my stores, right? Mm-hmm. Well, 40 years ago, a 14-inch colored TV set with a manual selector, it used to cost about $400. Mm-hmm. Of those dollars, now you get this amazing 80-inch screen, which is much better quality, for $400 of today.
Yeah.
Imagine that difference. It's not been for the benefit of the customers.
Right. Right. That's a great example too, because electronics is that one area where we're still advancing rapidly enough that the price deflation of innovation is outpacing the monetary inflation.
But this is physical goods.
But we would see that everywhere else.
But what about, artificial intelligence? Today we saw an example of this short clip. It could be a commercial. It's maybe 2 or 3 minutes. But if you try to film that commercial, we're from the media business. We tried to film that commercial 2 or 3 years ago. It would cost $500,000. There's a scenery here in the mountains, and then there's a lake, and inside the lake there's a submarine. Then you go in the submarine, and then there's these Russian guys arguing if they're going to launch World War III or not. I mean, it's a great production.
Yeah.
It could be a great ad, you know. And the guy said it cost him $5,000, and he believes the next year we're going to cost 500.
Wow. So are you a subscriber then that these two things are fundamentally incompatible?
What?
The technology is driving prices down.
Yes.
But,
and it's a good thing.
Yeah.
Deflation is a good thing for everybody.
Of course.
You know, when did we get sold that we need price stability? This is ridiculous.
Yeah.
There's no such thing as price stability.
Right.
Prices are relative, and some are going up and some are going down, and that's the way it should be. Yeah. And all the technology should be going down rapidly.
Yes.
Price of technology should be going down rapidly.
Yeah. Yeah, the way I describe it is the price is an approximation of how much effort it takes to solve a problem. And so we want solutions to problems to become cheaper, better, faster, cheaper over time. That's the point of capitalism and trade. I'm not sure how we got indoctrinated into believing that we need prices to go up.
Stable prices.
Yeah.
The mandate, you know, or even worse, the Fed comes and says, oh, our goal is to keep inflation at 2%. Yeah, we're goddamn thieves, you know.
Yeah.
You know, that's a pretty steep wealth tax.
Yeah.
If they take 2% of your wealth every year, you do the compound and it's going to be a disaster.
35 years, you're cut in half.
Yeah. So I saw the data the other day. Since the start of the euro currency, they've lost 99% of the value, you know. And this is just since I think it was 94 or something.
Yeah. Staggering. So, I mean, the Fed came to be in 1913, so we're now over 110 years into this iteration of the central banking experiment.
Yeah.
How much of this, are we going to have a massive intellectual economic hangover from this experience? Like, how long is it going to take for us to get back on track, assuming Bitcoin is successful and the central banking is sunsetted?
Somebody's going to cry. There's going to be a lot of crying.
Yeah.
And as usual, the most vulnerable and the weakest people will pay the hardest price.
Yeah.
So what am I saying? The people who are about to retire and think that they have earned their pension, they're not going to be happy at all.
Yeah.
It's going to be very hard. Because the first ones to be wiped out are the guys who are on fixed income.
That's right.
Yeah. So what we're going to see shortly is monetization of the debt. It'll be what they call liquefied is the term. Liquefied. Debt will be liquefied through inflation. And what that means is that people who have a fixed income will see their real income go to nothing.
Yeah.
And I've been there. We lived through that in the 80s in Mexico. I started working in 81. In 83, the country went broke and our company went broke. So it was my job to turn it around. And in the past 40 years, we've been really successful turning that company around and making many other companies. But I never forgot that that experience. You know, it was really selfish. Imagine that the price of the dollar for us went from 20 pesos per dollar, and 6 years later it was 3,000 to 1.
Jeez.
Yeah, 20 to 3,000. You never forget.
No. We often say that pain is information, right? It's that thing that puts you into
seared in your blood.
Yes. So you're absolutely correct. First of all, it's the poor, people living on fixed income, people living paycheck to paycheck. These are the people that suffer the most in these.
Let me say that paycheck to paycheck, they don't suffer so much, Robert, because they can always get a new job. Their salary will be revalued, okay? But their savings are going to be pulverized.
Yeah.
Unless they have Bitcoin.
Right.
The ones that really are screwed are pensioners with no cost of living adjustment,
Right.
Social Security recipients, which is basically that, and long-term bondholders, which you got to be absolutely retarded to buy a 30-year bond. Yeah. You know, I just don't understand, for the love of me. How could somebody think of lending money to the U.S. government at 30 years at a fixed rate? Yeah. It got to be the worst financial mistake ever.
Yeah, I remember learning about the quote unquote risk-free rate in college.
Risk-free.
And it made my mind melt because like, how can you have a risk-free rate? But the argument that, oh, well, they can just print money to pay off the bond, so they're never going to default.
Oh, if you define risk like that.
Oh, exactly. But it's an optical illusion, right?
Yeah, of course.
Because they can have, as you said, it's a negative real yield. But as long as you have a positive nominal yield, then they call it risk-free.
Yeah.
So there's so many of these illusions.
Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money. And be sure to subscribe to this channel to stay connected.